Good evening. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday. We're sitting here now at the 13th of December, 2021, and the time about 5:40 p.m. Central Time. So, warning sign for the week. We have 20 central banks giving us monetary policy decision this week. 20 of them. We saw something from the Bank of Canada today. Next, you're going to get, and you got part of an idea from the Bank of England today. I'll review that in my market letters, not here. I'm going to do them for my subscribers and cover it there, what was said. But then we get the formal Bank of England statement. Today was their Stability Act and what they said there, and then we get the bank statement a little later in the week. And then we get the European Central Bank and, of course, our bank. And then plenty of other banks are coming in there, all through South America and the like, plenty of them. This is a rough week to then trade. Why? What the Fed's going to do is it being anticipated by the market saying they're going to accelerate tapering from $15 billion a month to what? Going into the $30 billion range. They want to be done with the whole program by March. Then what? That's what the market thinks. Doesn't mean it's going to happen. I don't know how much they're going to increase tapering. In fact, are they going to increase tapering? I'm of the opinion they will, but I don't know what they're going to do. How are they going to view Omicron? What are they saying about that? Next, the dot plot. Now we get another series of dot plots. And remember, dot plots are cool because nobody puts their name on them. So we'll see how many people moved forward. Yes, into 22 forward, because that's what we hear is the Fed governors go out on the road. They're all talking about that. How's that going to impact the market? So that's what you're dealing with. It's probably the wisest thing to let the dust settle through Wednesday, then take your eyes right back on the market into areas that you stand out of the way at first, and then you go pursue whatever you have to do. I expect Santa's going to be here at year end. Once we're through with all this, what's really left? That's the key. And remember, this is the last full week of trading, and then we go right into the Christmas week. Gold has to be a disappointment to traders in that the inflation reading hasn't kicked it up. Past times when you'd hear inflation like rent's double-digit, tuition's going up dramatically, wages going up, this market would be on fire. It can't get out of its own way under $1,800. On the energy market, what an interesting day. Now, if America has a brain about it and an energy policy, read today what the Saudi prince, the OPEC oil minister, said. Don't you dare think about going short oil. That's what he put out there. I was reading it in Reuters today. Don't you even I think it was Reuters. I read it was Reuters or Bloomberg. I don't want to say the wrong one, so I'll say both. Don't you dare think about it. Okay, isn't that the same as saying, we're going to stick it to you, and if you do anything to put on a short position and break it, we'll cut the oil supplies? That's what we want to be in again? Permian Basin oil, it's going to go through the roof. Read the EIA report. I've written about it in my full research report for this evening already, but it's not going to be enough to offset what's needed as we come out of all these COVID situations and the oil demand going up according to the EIA report. Very, very important. As for interest rates, well, how do you play them going into this? That'll be the interesting thing. I think if you put 20 traders in a room and you ask 20 traders going in with everything you've heard over the past 30 days, would interest rates be higher or lower than they were 30 days ago with all this talk? And I think everybody, I really think it, would have said they'd be higher. And as a group, anything from the maybe from the 7-year note on, they'd be wrong on. It's the very bottom that's come up a bit, and the longer term has gone down. You were what, 1.3, 1.43, 1.44 today in the 10-year note. Wow. When you look at a weekly area chart of closes on the S&P for the week, we just dropped 0.75 of a point today. Okay, and that's through tonight too. When you take a look at what's gone on, you have not gone up and made a new all-time high. I know they talk to you about it in the cash markets and so on. You'll hear it on all the TV stations. But the futures markets haven't, and that's what I think most of us are trading. The trend is certainly up as you've got a pattern of higher highs, higher lows. The market's 18-week average of closes, what I call the line in the sand. is right here at 46.3740. If you go down to it, you break the uptrend, but you don't start a downtrend. Why? Because you could end up at worst with a higher high and a lower low. That's not a bearish pattern. The market today, and I'm talking today, not tonight, just missed taking out this low by 1/4 of a point, getting a little bit of a bounce tonight. Nothing major, but a little bit of a bounce right in there. When you come and you take a look at the Bollinger Bands, you've hit the upper bands here, the lower bands. Now you've come back and you're sort of hanging. Again, traditionally we get that element called the Santa Claus rally. Once you're through all this noise that we're about to get on these different central banks, that gets out of the way and the market then turns its attention to earnings, Christmas sales. How do you want to be positioned? Window dressing. Learn what that term is. It's going to be very important, especially on the chart action. When you come here, you can see that you're overbought. So we have a market that's overbought in an uptrend, acts a bit like it's heavy here, and you got to ask yourself, why even considering going into the FOMC meeting where you have no idea what's going to come out of that, other than tapering being the talk. But you tell me what the dot plot's going to look like. How's the market going to react to whatever that is? You could be a bearish dot plot and the market goes up. It says it was discounted. Too difficult. On the NASDAQ, you turn the trend back down tonight. Lower highs, lower lows, outside day down. Now, if the market were on Tuesday or Wednesday to get through today's high, which was 16,413, I think you'd make an immediate run to the 16,659 or wherever the top Bollinger Band is. But in the meantime, with a downtrend, you can cut into between here and that lower Bollinger Band at any time. In the Dow, you're overbought. If you're going to go back to the support of the 18-day average, you're going to break the uptrend. You don't want to get under this low that you just had at 35,488. If you do that, you go back into your stall area. So you've got to be cautious right here. And of course, how do you play the headwind coming at you of all these central banks? That's the difficult part. The weak sister of the whole group, and it looks ugly, I've got to tell you. I know people keep talking, oh, the Russell's where you want to be. I don't know what they're talking about. I'm a chartist. What the heck's bullish there? If anything, you're starting to get crossovers that are even more bearish on moving averages. The longer term averages, and admittedly they're backward looking, they're putting a lot of pressure on that market. In the VIX, I mentioned, I thought that last week, take a look at all the videos I've been putting out, I predicted that the 200 and the 100-day average, and they converged right here, that was going to give the market problems if it tried to get through them on the downside. So far, that's the case. Let's assume they take them through them. Then I'm looking again at the potential of the 15 level. If the market holds here, it has to get through the 2266 level to prove it's got anything. So between here and the 18-day average of closes in red, a lot of resistance. Then we get to the 30-year bond, and I'm going to repeat it. You put 20 people in a room 30 days ago, give them all these headlines that you've read. Which way, they don't see charts, which way do you think they'd have thought interest rates were going? I think they'd have told you, oh, longer-term rates are going higher. They've been falling. Remember, the higher futures go, it's an inversion market. The market's going down. Same thing in the 10-year notes. I wouldn't give you 2 cents for any of this. Let's get the FOMC out of the way and have an idea of what the Fed is telling us going into the beginning of the year. What are they going to do? And the wording is going to be so important. In the dollar index, you've got lower highs, lower lows. You're staying over the 18-day average, and you're going sideways. I'm laughing because it's about as neutral as you can get on a chart, and the euro's pretty much the flip-flop. I think these markets have just said, or the pros have just said, you guys trade it, you amateurs. We'll wait and see what the next move looks like to us after we see all this. The British pound is still bearish, but it's very oversold. It's very difficult to get shorted right here in an oversold market. It's much easier when they embed. You're not embedded, you're oversold. In Bitcoin, you're still washing out to the downside. So today, if you take a look, here was the market. You came down today. and finished the day off $1,895. So here's a $70,000 reach, and now you're back to $46,595 and down, well, you're around $46,700 tonight, but you're embedding. So if you embed, and we should take a look at this, both numbers are under last Thursday, 20. What about the day before? Not so. Day 1, 2, 3. You got your fully embedded reading with today's action, which tells me that on rallies, as long as you don't take out today's low first, the pros are waiting to hit it. That's what I'd be expecting. Am I right? Who knows? It's what I teach in my charting courses. Brent versus WTI crude. Look at how you just gave up that 375 level. Now, can you believe that Prince Solomon said, hey, if the short sellers come out of this market, if you guys want to start pressing it, you wait. We're waiting for you. That's a pretty big statement. Okay, the statement means they'll cut off oil. That's their tool. And that's the way that they can hurt the short seller. Do you want to be in a market that they're gripping? Now, if you're the Saudis and OPEC, which way do you want the market to go? Do you think it's this way? It's this way, within reason to them. They'll define the word reason. Not you, not me, not the market. That's what they said today. What craziness. You can believe it. You might actually enact it, but you don't say it. That's the point that I'm making. That's all that it is. Now, EIA saying the Permian Basin, we're going to pick up. I told you those cowboys out there, and that's what they are. The independents are what's picking everything up. You get the big boys just going, oh, we got to watch our balance sheet and return money, so we'll do a little bit. It appears that about a 20% increase is the CapEx that's going to be spent for next year in that area. That's according to the EIA report today. The Fed Brent crude, still in an uptrend, but the battleground's so crystal. It's the 100-day average along with the 18. You came off the lows here and went right there, and like glue, the market got stuck at it. Same thing in the WTI, very difficult to try to make a call out of that. Heating oil, same thing. And then you get to the nat gas, which I thought today, this was the gift, I think, for the shorts. I'm probably wrong on what I'm saying, but I know what I wrote my clients today because I was saying, why? You got your fully embedded reading, and on the rally, it didn't budge. So I was looking at it going, I'll bet the shorts are going to, the new shorts want to come in on that. We'll see if I'm right or wrong. You know, could you get back to this lower number? You could, but that's a big stretch. You might want to be looking at window envelopes and some of the other tools there, and that's where this comes into play. My complete research package and my trading kit, the free kits, take advantage of the free stuff. It explains all this. It gives you a lot of these tools. We link up with the different exchanges for free courses. Not the courses I put out. I get paid for those because you're not going to get them for free from an exchange. They don't have the talent I'll bring to it. Yeah, it sounds conceited, but it is the way it is. The simple fact is, we put together here, be it the charting software, a few of the specific video courses for you that I put out, the free pivot points and the like. They're all in there with the charts you need to work with it. And it's both. A download, you could use a Java-based charts, they're a web-based, either one that you want to work with. And then we start explaining M1, M2, M3, how that works. The way that you're looking at different reports, 14 popular chart patterns, how do they work with it? And of course, all the literature on the markets that a lot of people want. It's free. Just like Joe Namath on TV. It's free. Make the call. See if you qualify. Well, you can do that, or you can go on the free offers on our webpage and take advantage of everything there. I'm Ira Epstein. It's free. You have a good day.